And that's the picture in Ukraine. In the meantime, Egypt secured an expanded $8 billion deal with the International Monetary Fund. An extension of the deal signed back in December 2022. This as the Northeast African nation's central banks agreed to let its pound currency trade freely, along with an interest rate hike of 600 basis points. Of the monetary developments in Egypt, Pieter du Preez, senior economist at Oxford Economics Africa, joins us with his analysis on the monetary developments in Egypt. Pieter, thank you for your time and good afternoon.
Thank you for having me.
All right, Pete, maybe you can take us through this journey that Egypt has been on. Of course, we're seeing this IMF deal come through now. It's an extension of a deal from back in 2022. Just help us understand what has transpired here.
Yeah, it's been coming for quite a while now. The first and second reviews that was now completed at the end of January was actually being delayed from March last year. There's a couple of reasons for that. Firstly, the main sticking point was on reforms that Egypt did not implement. The two or three most notable ones that came up quite regularly is, very importantly, exchange rate liberalization. Egypt always kept the exchange rate managed in a certain way, and also the IMF wanted more monetary policy tightening, and they also want more fiscal discipline. So on these three factors, Egypt failed over the last year, and there was also political factors at play, as we reported previously, that Sisi wanted to get the election done and dusted before making any policy reforms. So Egypt hanged on these key reforms, and I think what's also come out recently with the Ras Al Hikma deal in the northern peninsula of Egypt is that there was a deal going on in the background that Egypt knew that's going to make the load a lot lighter for them on the FX side, and they wanted to confirm this deal first before making any policy reforms. So this deal happened now in February, and this has now led us to this point, and we've seen a deal coming through yesterday.
Now, we must speak about the intricacies of this deal, because, of course, we've spoken about the liberalization, the monetary policy, tightening, some fiscal discipline here. But, I mean, it also sounds like there's still lots of headwinds. If you're a normal Egyptian citizen in the streets, Pieter, this is a lot of economic pain.
Yes, and normally what happens with these IMF programs, it will come with a lot of short-term pain, but with a lot of long-term gain. In Egypt's sake now, so if it coincides with an exchange rate liberalization and we see the exchange rate being devalued, like in Egypt's case, going from 51 pounds to the dollar to about close to 50 yesterday, you would expect there will be some inflationary pressures coming over the short term in the next couple of months. Also in the large interest rate hike, not a lot of us expected that magnitude of hike. Most of it, well, only a few of us only had 200 basis points in hike for the next couple of months. So the 600 basis points was quite a surprise. So thinking about people having debt in Egypt, that will cost them dearly. They also have probably credit extension to the economy will fall sharply. And then, like I said, we're going to have quite a big inflation increase coming in the next couple of months. But this big front-loaded interest rate hike should curb a lot of that inflationary pressures. The country also benefits from base effects. For instance, we expect February inflation to fall quite a lot. There's a lot of supply-side pressures that's already filtered out of the economy, like wheat prices are a lot lower than the peak we have seen. Oil prices have been down since what we had about a year or two ago. So there is some base effects that will assist the economy, but definitely these reforms that's going to come through is going to have some short-term pain that the country has to deal with.
But of course, there's this $8 billion, and I think one thing that we've seen in the past is that sometimes these IMF bailouts are mismanaged, not used the way that they can be used, and therefore don't result in the cushioning that they are supposed to result in. Pieter, just speak to us about that, the efficient use of this $8 billion.
Yes, that's always the key with these IMF programs, is how countries adhere to these reforms, and are they actually sticking to it? And especially in Egypt's case, we have been down this road before. This is not the first time that we hear the news that we'll see a liberalized exchange rate, more fiscal prudence, and monetary policy adherence. So we've seen this before. with Egypt, and that's especially for us. That's why we're still very pessimistic on our long-term outlook for the country. We need to see a sustained fiscal discipline coming from the Egyptian government before we will change our outlook on the country. But we also have to remember that what's happened recently, the big sticking point for Egypt was this external financing gap that needed to be plugged over the next couple of years. They had a massive amount of debt interest payments that need to be repaid. So the big game changer in actual fact was the Ras Al Hikma deal with the UAE buying some land in the northern peninsula of the country. That $35 billion that's going to come into the country, well, 11 billion of that is already with deposits with the central bank, and another 24 billion will be new inflows. That was the big game changer. It lifted a lot of FX pressure of the country. It allowed them to have a lesser devaluation. As we think, just remind back a couple of weeks ago, the black market was trading at close to 65, and it was at 45 before the devaluation actually happened. So it did afford the country the opportunity to have to lessen the pain on consumers over the, let's say, short to medium term.
And with this picture that we're painting for us today, Peter, I must also ask you about Egypt and its proximity to what's happening in Gaza and the Red Sea. Are you at all concerned about that and what that might do for the stabilizing of this economy, possibly leading to delays that were unforeseen?
Yes, that's a big problem for the country currently. You have this positive news on the one end, but also on the other end, you're still having a lot of geopolitical tensions that's affecting the country. So two of the biggest forex earners for the country is, of course, Suez Canal revenues and remittance flows, and you also have oil revenues and tourism revenues. That's the four main ones. And two are directly impacted by this war. We're already hearing that there's a drop in tourism demand because of the tension in the region. And we also see Suez Canal revenues down by almost 40 to 50% within the first 2 months of the year. So on the current account, it will be a big knock, and that unfortunately creates a bigger financing gap to be plugged over the short term. And then also on the other hand, because of the FX restrictions being lifted, on Tuesday, the president said that all goods held at ports will be released. That's about $10 to $14 billion worth of imports that was released on Tuesday. So on the current account, you will see a massive widening of the deficit, creating more financing pressures. But like we said, the Ras Al Hikma deal is of such a big nature that it will cushion the country for the next couple of years. But it's still the long-term picture that's the most concerning one.
Well, Peter, I hope next time we chat, we can definitely have a more upbeat conversation about Egypt. Thank you for your time today. It's been a pleasure hearing from you. That was Pieter du Preez. He is a senior economist at Oxford Economics Africa.